The interesting thing here, obviously this chart has not fallen nearly as much as Bitcoin dominance had. And so as we think, what is the implication here? What is the discrepancy between these two charts actually telling us? It's telling us that all of the outperformance, or let me say it this way, all of the decline in Bitcoin dominance is due to the outperformance of ETH and XRP.
This episode is brought to you by Trezor. Trezor makes beautifully crafted hardware wallets that make it easy for you to safely store your cryptocurrencies. I'm a big believer in self-custody. I've been using hardware wallets for years, and Trezor was the pioneer of hardware wallets, and they started this journey in 2013. Their hardware wallets are open source, and they support a variety of tokens, from Bitcoin to the top altcoins and even new coins such as BlackRock's BUIDL. And I'm personally a user of the Trezor Safe 5. It's a beautiful device and easy to use. And Trezor offers a hand-holding service where they can help you onboard and set up your device so you can speak directly to a Trezor representative who can hold your hand through the process. And if you use the code ThinkingCrypto, all one word, you can get 5% off your purchase of a Trezor device. So to learn more about Trezor and all their great devices and services, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Caleb Franzen, who is the founder of Cubic Analytics. Caleb, great to have you back on.
Tony, it's been tradition, man. Every 4 to 6 weeks, we rip another one of these and they're always a blast. So really looking forward to this.
Absolutely, man. We've been talking since the beginning of the Bitcoin bull market, like 2023, right? And we've ran up over the past couple of years, and it seems like this is the year of the blow off top. What are your thoughts on Bitcoin's recent move, and do you see a blow off top coming by the end of the year?
This move definitely happened a lot faster than I expected. I know I was very defensive, if not leaning slightly bearish during March and April, but I laid out all the criteria, right? I said, if we get back above the 21, the 55, and the 200-day moving average, then I'm going to flip super bullish again. And that was right around 85 to 86,000. So obviously getting to 123K. I think, one of my superpowers as an investor, as an analyst, is being able to change my mind based on objective facts and objective reality. So we can fight trends or we can align with them. And thankfully, we've broadly been in a super strong uptrend, at least for Bitcoin, for quite some time now. So it's been very easy to be bullish, to have our upside price targets. I've been talking basically since the second half of 2023, saying that my cycle price target is 175,000 for Bitcoin. And it's been slow and steady. We've, just keep making these higher highs and higher lows, but we're getting closer and closer month after month after month, right? So look, I think this latest breakout, it's been exactly what we could have hoped for in a lot of ways. I think the funny thing about it, oddly enough, is a lot of investors don't seem too excited or too grateful, right? It's just Bitcoin's at 118,000, 119,000. I'm still getting into debates on Twitter Spaces, people talking about how Bitcoin is a Ponzi scheme. It's just they've lost the plot so much, and they refuse to actually look at what's really taking place here in this ecosystem, but that's their loss, not ours.
Yeah, well put. And you mentioned you reserve the right to change your mind, and we have to because the data can change, right? Like for example, black swan events happen. I would consider the tariff crash that took place in Q1 into Q2 a black swan event. No one saw that coming, right? And that kind of changed the whole dynamic. So you have to adjust your timelines and, like you said, look at the moving averages and so forth.
Yeah. And, I think that's one of the things, right? I say it all the time. It's okay to be wrong. It's just not okay to stay wrong, right? So you have to have a rules-based system to change and modify your perspectives based on actual reality. And so for me, using stuff like moving averages, the Williams percent R, looking at bullish and bearish RSI divergences, that's my bread and butter, right? And so I'm going to keep kind of looking at those data points and kind of letting things carry from there. I think one of the amazing things that we've actually been seeing in this market for the entire ecosystem is the fact that we continue to see stablecoin market cap rising, but at the same time, we're actually seeing stablecoin dominance falling really drastically. I brought some charts with me, but I just want to explain this and kind of set it up a little bit. What that's telling us is that new stablecoins are being issued and minted, but that investors are not keeping them in stablecoins. They're being automatically deployed into, let's call them speculative assets, basically banking on more upside in this market. So let's go ahead and talk about it, right? This is the chart. right here, this is looking at USDT plus USDC in green. So that's total market cap, and then their respective dominance combined in blue. And so obviously, basically since that April level, which was basically the peak of the tariff scare, if you will, we've seen really good things take place. Let's go ahead and prove it. If we look at that same exact chart and then add on total crypto market cap, excluding stable coins, let's look at when that peak actually occurred, right? It was at the local lows in the total crypto market, and really good things have taken place. The other thing you'll notice here, right, is stablecoin dominance is actually making lower lows right here, right now. So that's telling us that this recent downtrend in stablecoin dominance is really intact. And obviously a downtrend in stablecoin dominance is exactly what we want to see here as investors.
So yeah, absolutely. You mentioned Tether dominance falling, right? Stablecoin dominance falling, but also Bitcoin dominance has been falling, right? And that correlates with these rallies that we've seen historically.
It has. So I actually brought two awesome charts just to talk about this exact topic, even though we didn't plan this ahead, Tony. But look, this is Bitcoin dominance, right? And so obviously one of the really interesting things about this recent acceleration to the upside in the overall crypto ecosystem is the fact that Bitcoin dominance is falling here. And so I think based on this kind of dynamic, my general target is we're probably going to return right back to the 62% level for Bitcoin dominance. Could we fall lower than there? Absolutely. Could we rebound on that level? That's actually my expectation, because we could see former resistance has already flipped into support. So again, if we're going to be objective, we need to recognize that this is valid potential support here, and that would generally be my expectation. The interesting thing that I wanted to show here, Tony, is if we look at this chart, which is combining the dominance of Bitcoin, Ethereum, and XRP. The interesting thing here, obviously, this chart has not fallen nearly as much as Bitcoin dominance had. And so as we think, what is the implication here? What is the discrepancy between these two charts actually telling us? It's telling us that all of the outperformance, or let me say it this way, all of the decline in Bitcoin dominance is due to the outperformance of ETH and XRP. And so for a lot of investors, that's actually really good news. But for a lot of investors who are really far out onto the risk curve and what we could consider small cap altcoins, this decline in Bitcoin dominance is not actually helping them, because what we're seeing is that almost all of the outperformance in the altcoin ecosystem is really just coming from ETH and XRP.
Wow, that is interesting. I've never looked at the combined dominance like this. And that is very fascinating that those two assets are doing a lot of the damage, so to speak.
Well, look, I always try to come with some unique alpha here, Tony. So it's literally my job to find these crazy little correlations and market dynamics and try to bring them to as many people as possible. So, hopefully that's what we're doing here today.
Can we look at a Bitcoin chart, and if you can tell us what you're looking at, could this move right now lead us to a local top and then a continuation into a blow-off top into Q4?
So perfect. Let's do it. Let's go ahead and talk about my actual targets here for Bitcoin based on this recent breakout. First of all, I want to I use very simple methodologies here, right? We're basically just going to be using a Fibonacci extension in logarithmic scale. I'm going to be taking that Fibonacci from the January of 2025 highs to those April 7th lows. And I'm going to make sure that I have my Fibonacci levels based on logarithmic scale, not linear, because Bitcoin is in a logarithmic uptrend. And so based on that alone, that 161.8% extension gets us to 138,000. You'll also notice that that is also basically equivalent to the measured move of this bull flag breakout that we've just achieved. You might be saying, well, Caleb, this just looks like a lot of hindsight bias. Guys, I was talking about this regression bull flag in real time as we were forming it before we even broke out. So this has been a very consistent message that I've been sharing both on X, on Substack, with premium members of Cubic Analytics, on my live stream, so on and so forth. Now let's just add one more target to the upside, and we'll look at the 261.8% extension in logarithmic scale, and that gets us to 202,650 roughly. Wow. And so, again, the cycle target that I've been talking about has been at minimum 175. And that's by basically doing that same exact stylistic approach, drawing a Fibonacci from those 2021 all-time highs to the 2022 bear market lows. In logarithmic scale, we get to 174 and change, right? So I've been saying, look, I'm willing to entertain higher upside price targets, probably not too much higher, but it's definitely possible. And that's kind of how we get there, right? So we can look at 138 to 139, for the 161.8% extension. We can look at that bull flag getting us to basically 147. And then we can look at the 261.8% that gets us to around 200,000. So we're getting a lot of confluence here in terms of how these different indicators on different time frames are all coming together. And it's just fantastic.
Obviously, we don't have a crystal ball. Obviously, no one can call the exact top, but these are using, like you said, the Fibonacci model. And are you anticipating, and this is a hard thing to answer, timeline wise, that this end wraps up in Q4 or it might bleed into like 2026 Q1?
Like you said, we don't have an answer for that, right? So we can speculate. The funny thing about it is when I first came out and shared my 175K cycle price target, I think that was in July or August of 2023. We were trading right around $30,000 per BTC. And a lot of people were saying, is that your price target for the end of this year, which was 2023? Is that your target for 2024? And I was like, guys, it's a cycle price target. I have no idea when the cycle is going to end. If anyone else has a crystal ball, please let me know. I'd love to see it. So look, I have absolutely no idea. I think there's been this whole debate about whether or not we're actually going to follow kind of that 4-year cycle kind of dynamic. And I've always said, like, look, the 4-year cycle has been the easiest, simplest, and arguably one of the most effective models that we can actually use. But, this time really is different. And, we can point to a variety of different data points that show that this time is different and how last time was different than any time before that as well, right? So each cycle is always going to be a little bit different. The 4-year cycle is interesting. It gives us a really valid blueprint. If you want to follow the 4-year cycle, though, I think on average, Bitcoin peaks around 16 to 17 months after the halving. And so that basically puts us in August to September, maybe October for the cycle peak. I'm looking at all the economic data. I'm looking at the Fed, who's probably going to be cutting rates in the back half of this year. I'm looking at everything taking place and I'm saying, look, all I see are higher highs and higher lows. All I see is corporate earnings on the rise. All I see is risk appetite in the stock market doing really well. All I see is Bitcoin breaking out. Why am I going to try to put a limit on when the party's going to end, right? If everyone's having a good time, hot girls are showing up, all the people are coming in with new bottles of tequila, let's keep the party going and let's make sure that the neighbors are fine, right? And so far, we still kind of have that dynamic. So I have no idea when the cycle is going to end. I have no shame in admitting that. If anyone does know when it's going to end, please let me know. I'd love to hear it.
Yeah, for sure. That is such a hard thing to answer and to predict. And like you said, we don't have a crystal ball. And I often tell people, if they do have a crystal ball, just tell me the winning lottery numbers next week. I could become a millionaire. Right?
Exactly.
How about total altcoin market? What are you seeing on that front? Because a lot of people hold altcoins, they don't necessarily hold Bitcoin.
I think that, it's been no secret that Bitcoin has been leading this breakout. We've been seeing Bitcoin dominance pull back, but from a structural perspective, Bitcoin itself is what's really leading the way here this cycle, right? And so what's really interesting about this chart is we're looking at total crypto market cap, again, excluding USDT plus USDC, right? So we're basically just looking at the actual cryptocurrency ecosystem, excluding stablecoins. What's interesting about this is it has actually yet to make new cycle highs. And so when we're looking at Bitcoin's price structure, which again looks like this, when we achieve this breakout, really good things have happened. We've gone from 112,000 to 123,000 in a matter of days, right? And so as we're looking at the total crypto ecosystem now, if this is actually going to follow in the footsteps of Bitcoin itself, then we should see this breakout. We should have it stick the landing. We should achieve that extension. Maybe we, kind of produce one of those classic breakout, retest, rebound types of setups where we get some extension up into this range. We come back in, we retest this green level, and then we rebound again to new cycle highs. I also want to highlight here, we're looking at the 21, the 55, and the 200-day exponential moving average. We have clear proof right here, right now, that we have a full bullish formation where price is above the 21 is above the 55 is above the 200. All three of those EMAs have a positive and rising slope. That's very different than the dynamic that was occurring here when we were in a downtrend. That's very different than the dynamic that was taking place in the middle of last year as well. It's much more reminiscent of the dynamic that was taking place in Q4 of last year. It's much more representative of the dynamic that was taking place at the end of 2023 and the beginning of 2024. So what we have here statistically is an uptrend. And again, as investors, we now have a choice. We can acknowledge that this uptrend exists, it is intact, and we have a choice. We can align with it or we can fight this uptrend. And I'm going to choose to align with it every single time. And what this is telling me is that whether or not Bitcoin outperforms everything else, whether or not Ethereum keeps outperforming BTC, let's see. All I know though is that good things should happen for the ecosystem as a whole, and we don't really need to overthink this too much. We just need to have the exposure. That's it.
Absolutely. So we are certainly in bull market territory, and Bitcoin, of course, leads the market. So we can expect to see that follow Bitcoin as it continues to move up.
Exactly. Tony, I actually forgot I have another chart on this as well, taking it kind of a step further. This is actually looking at total 3 excluding stablecoin. So obviously total 3 is looking at total crypto market cap, excluding Bitcoin and excluding Ethereum. And then manually I'm taking out USDT and USDC. So obviously this is not back at those cycle highs yet, right? But we have this kind of intermediate term base here where we're also trying to achieve that structural breakout and basically make new 6-month highs. Guys, objectively, there's nothing bearish whatsoever about making new 6-month highs. New 6-month highs, in fact, new highs on any time frame is representative of an uptrend during that time frame. So if we're making new 6-month highs, that's telling us we're in a 6-month uptrend, basically. So, again, really good things should take place here. And if we do achieve this breakout, if we stick this landing, then the assumption here, the bias should be that we should return back to these cycle highs. So we should go from basically 750 billion to almost 1 trillion in total 3 minus stablecoins. And I think, for a lot of investors, that's great news, right? Whether or not those altcoins do outperform Bitcoin, whether or not they do outperform Ethereum or XRP, it's just telling us, look, we're in an environment where a rising tide is going to lift all boats and things should go pretty well from here.
Absolutely. And I like to remind people, just look at what happened in Q4 of 2024, because, sometimes people, they have short memories and it's almost like, what have you done for me lately? And it's like, when did you buy? Did you not buy the bloody bear market and you've been riding the wave up, right, with Bitcoin? But unfortunately, some people don't. But it's like, hey, what we experienced in Q4 2024, we're going to see that plus more.
I hope so. Look, I'm always going to reserve my right to change my mind. If we see Bitcoin or total minus USDT minus USDC fall below those moving averages, very similar to what was occurring in February and March of this year, I'm going to sound a lot more defensive when I'm on your podcast next time if everything is kind of lining up that way. But so long as we have this dynamic right here, right now, in my opinion, it's irresponsible to be bearish. I'm looking at the sign behind you. We're trading at 119,205. For Bitcoin. Come on, let's show some gratitude and excitement here, right? This is what we've been hoping for a long time.
Absolutely, well put. Let's look at the individual altcoins such as Ethereum. It's been pumping this morning. What are you seeing there?
So the message that I've been sharing with premium members of Cubic Analytics is this structure here for ETH BTC. So you'll notice we are now making new multi-month highs on Ethereum relative to Bitcoin. This is a massive, massive breakout here. And am I going to interpret this as, Ethereum is now outperforming Bitcoin, so I'm going to sell my Bitcoin and rotate that into Ethereum? I'm not going to do that because to me, this still looks like a much longer downtrend, right? But it does tell me that investors, if they're looking to reallocate new capital into the market right here, right now, risk is more favorable towards Ethereum than it is for Bitcoin. And as someone who leans towards being much more of a Bitcoiner than a crypto guy, I'm willing to admit that and acknowledge that. But here's why. The strongest parts of the bull market occur when ETH is outperforming Bitcoin. The strongest parts of a bull market occur when Bitcoin dominance is falling. So just because the majority of my portfolio, 70% of my net worth and more, is in Bitcoin, I own 0 Ethereum. I own 0 XRP. But I am rooting for ETH to outperform Bitcoin. I am rooting for XRP to outperform Bitcoin because that tells me that my Bitcoin is also going up tremendously, right? And so, look, now that we've achieved this breakout in ETH BTC, the message that I've been sharing with premium members of Cubic Analytics, I'm happy to bring the alpha to your audience, Tony, is that we should probably go back to the year-to-date highs here from January of 2025. So, that's pretty juicy upside here on a relative basis. I think we're talking basically about 35-40% basically to the upside. And look, let's talk about ETH on an absolute basis relative to the US dollar. I think if we want to look at the trajectory of ETH right here, right now, let's draw a Fibonacci from basically those December of 2024 highs to the April 7th lows. And we're going to keep this actually in linear scale because obviously this has not gone through some logarithmic function over the last 4 years, right? This has really just been this massive long-term consolidation phase here. But that 161.8% target is measured at basically 5,800 on the price of Ethereum. I don't know anybody in their right mind who would be disappointed if Ethereum was trading at 5,800. The really interesting thing about this, guys, if we add on one additional layer here and also put a Fibonacci on the 2021 highs to the 2022 lows, that 123.6% level is trading at the exact same price. So what does that tell us? It means we have a lot of confluence at 5,800 as an actual price target. We don't just have one data point, we have two data points using two different time frames, but the same indicator. And so look, that's a really speculative bet that we're going to get to 5,800 on ETH. But if we keep seeing market dynamics like we've been seeing over the course of the past 3 months, I don't know how you could call that unreasonable. Is it bold? Absolutely. I'm trying to be bold. But I also think that based on actual objective data, it's a valid price target.
I'm an ETH holder, so I would be very happy with that. I'm curious, do you think there's potential now, and it may be a low probability of even going higher, touching higher levels on the Fibonacci model?
Probably, but maybe your audience has kind of gotten a flavor for how I do things. I like to really take things one step at a time, right? Sure. So let's first get to 5,800. If and when we get there, let's all pat ourselves on the back. Let's pop a bottle of champagne, and then we'll start to look at new price targets, right? But for right now, all I'm comfortable to say is 5,800. It's also why, look, it's also why I'm only saying let's get back to those year-to-date highs for ETH BTC. That even still feels very bold in and of itself, right?
Sure.
So again, I just want to take these things one step at a time.
Yeah, absolutely. And great perspective you shared on, being primarily a Bitcoin holder, but rooting for the other altcoins and looking at how the market is moving overall. What about XRP? What do you got there?
Dude, I got some good stuff on XRP, brother. I know you and your audience are gonna absolutely love this. So the message that I've been sharing with premium members of Cubic Analytics is we were, on the way towards producing this higher low here, which was very different than this series of lower lows, right? So objectively, that's a trend change. And this overall price action, I know we basically did nothing for about 7 months on the aggregate, but this was a really strong consolidation when the rest of the altcoin ecosystem was really bleeding out, right? And so the fact that this really just had a lot of that sideways price action, sellers were really getting exhausted, right? And so not only did those sellers get exhausted, but then the buyers started to really come back into control. The thing that we're looking at here is the anchored volume weighted average price from those year-to-date highs, which were obviously new multi-year highs. And look, I told premium members of Cubic Analytics, I'm not sure what's going to happen when we get to this level. We were trading back down here at the time. I acknowledge, though, that every time we've retested it, it's acted as resistance since those all-time highs. So what I told them was, if we break and stay above it, what is that telling us? It's telling us a clear character shift in XRP, going from this consolidation phase to potentially the next leg of an uptrend. And so what have we seen? We got that breakout at basically $2.50, and we've already gotten to $3 very quickly, just in less than a week, right? So clearly that change of character has come back into the market now and is showing us really good things for XRP. So I think one of the amazing things about this particular indicator and the strategy that we're using here is, so long as we stay above this anchored volume weighted average price, which right now is trading at $2.56, is if we stay above there, you have to be bullish on XRP. If we fall below there, you can think about trimming or reducing some exposure, getting stopped out, shifting into more of a defensive stance, slowing down your DCA schedule, whatever the case is, right? It's going to depend on your individual case. But if we stay above that anchored volume weighted average price, which we are, then you have to be bullish, right? And so I think that's, again, it's a way to have a bias, to recognize what the trend is, and to exercise that trend into your bias, and then be willing to change your mind if and when the trend itself does change. But right now, it's telling us, hey, look, we're in this really strong uptrend. You got to stay long.
I think, what's the saying? The trend is your friend until it changes.
Yeah, or like until the end or something like that, right? So that's basically it.
As far as price targets, let's say you do a Fibonacci model on it. What are you seeing as far as maybe a next local top?
That's a really good question that I was not prepared for, Tony. So this is why I love coming on to your podcast because you ask me really challenging, good questions. So what I would do on this, maybe I can actually even share my my trading view screen on this.
Sure.
Yeah, I can. Perfect. So let's do this live. Because there's also another XRP chart that I did want to go ahead and cover, but we'll do this live. We'll do a Fibonacci from the high to the low of this consolidation. Looking at the 123.6 and the 161.8%, we're doing this in linear scale. That basically gets us to $3.80 and $4.50. I would argue, though, that based on this massive acceleration, it does make some sense to also put these in logarithmic scale, and that modifies our price targets to $4.05 and $5.38. So, first and foremost, we're going to need to achieve a breakout above that range. I'd also be curious to see where that 61.8% level is, because we might actually have some pretty interesting confluence here, at least in linear scale. Oh no, it's not. So I don't know. It's look, I think if you don't want to manage risk around that anchored volume weighted average price, and you want to do it from a tighter level, do it around the 61.8%, because now that raises your stop loss from $2.56 to $2.72. But look, these would be the upside price targets here based on that analysis.
Very nice. I would be very happy with $5 around that zone.
Sure. I'd be happy for you guys. And look, I own zero XRP, right? So drinks on you guys.
And I've been transferring my audience. Like, I'm gonna liquidate all my altcoins, but there's some Bitcoin I'm never selling, man. Like there's some Bitcoin I'm selling, but some I've said like I'm leaving for my daughter. It's on a hardware wallet. That shit is locked up. So I'm using altcoins to just get more liquidity, man, and buy more Bitcoin for the long term.
Yeah, absolutely. I mean, look, I have my entire Roth IRA invested in BTCL, and it's I'm not sponsored by them. I have no affiliation with them. I just like their product. And it's the 2x leveraged spot Bitcoin ETF. And I've been hovering my finger over the sell button on that to maybe reduce anywhere from 10 to 20% of my exposure, because this has been a massive rally. And, I think my Roth IRA is up like almost 300% year over year. So, the returns are coming in, and it's our job now as, look, in a bull market, everyone feels smart. Everyone sounds smart, right? It's easy to make money in a bull market. That's not the challenge. The hard part is keeping the money, right? So it's a lot of fun. We're having a great time. It's really awesome to look at these upside price targets and imagine what our lives could look like if and when we get there. But I also think it's important to take some profits off the table. I mean, even just from a short-term trading perspective, like I was in Toshi over the last like 24 to 36 hours, and I was up like 16% versus where I entered it yesterday. And so it's like, I'm going to take those profits, and hey, it was 16% and great. I paid for my Airbnb for the next month or two. I'm going to pay myself, right? That's part of the game here. So I hear you on that 100%.
I think you had mentioned this before in previous interviews we've done. Are you a leverage trader? Are you a spot trader? Are you a macro trader? How do you play this market?
I mean, if I'm doing any trades, it's always going to be based on price action and technical analysis. So I'll be looking at those statistical indicators. I'll be looking at price structure itself. 119,400 on your board there on the back, by the way. Awesome. But look, I think I never touch leverage. I don't trade options from a real trading standpoint. I'm exercising a cycle thesis here, which is why I own BTCL and the Roth IRA. I'll tell you, though, I was feeling like an idiot during the decline from basically January through April, though, right? I was sitting on huge profits and I didn't take any of it. And just look how that fund performed during that consolidation, right? Because look, it's a 2x leverage fund during a consolidation. You're obviously not going to do very well when Bitcoin falls 31, 32%. So, but look, I held on. And, I'm obviously very happy with that decision, but it's because I have a lot of conviction in Bitcoin specifically, and kudos to everyone else who has a lot of conviction in other altcoins. I'm not one of those people. But look, I'm rooting for everybody to do well, and if you guys outperform me, I'm not going to be bitter about that. And, like I said, it's just drinks on you guys.
Yeah. And to your point, like sometimes even it's like, I tell people like, if this is still all new to you, don't try to, how should I put it? Don't try to chase every shiny object you see, right?
Sure.
If you're making money, that is a win. Like even if your coin gets outperformed, but you still made an incredible return, hey man, you're winning a life, right? It's better than losing and not having that money. So you got to be thankful as well.
Yeah, I completely agree. Tony, I brought another XRP chart. Do you mind if I share it with you guys?
Absolutely.
Okay, let's do it here. You guys probably saw it when we were looking at the actual trading view chart, but I have another piece of analysis looking at the relationship between the 21, the 34, and the 55-day EMA. So if you guys are looking at XRP and thinking, I want to get more exposure, how can I do that using technical analysis? How can I do that using statistical indicators? I think these three EMAs are providing a really interesting opportunity because as we can see, we're seeing a massive acceleration in those EMAs. We're seeing the price of XRP trading above all three of them. The 21 is above the 55, the 21 is above the 34 is above the 55. So this is a really good sign. The thing that I want to highlight here is look at the massive acceleration that occurred during that Q4 thrust, right? We basically went from 40 cents all the way up to basically $3. So let's just pick with some round numbers here. When we came back and consolidated into the 21 and the 34-day EMA, that was dynamic support, which produced new highs here. So basically, I'm telling you guys, you had an opportunity to get long basically around $2 and ride this back up to $3.40. Not a bad trade from a statistical perspective without rushing to get the exposure. You were actually using a proven methodology. And so as we're seeing these EMAs slope and trend significantly higher here, it's telling us, look, we might not have that opportunity right now. It might not come next week. Maybe it comes, sometime in early or mid-August. But if and when we do retest the 21, the 34, and the 55-day EMA, we now have three levels where we can DCA and get some exposure with very easy invalidation. If we fall below those EMAs, you can trim that new exposure the same way that you would have gotten out right here and avoided this decline from basically $2.60 all the way down to $1.60, right? So, obviously if you sat through that to today, you're still very happy with yourself, but maybe you weren't sleeping very well at night during this drawdown, right? I don't know. So this is where using these statistical indicators, these dynamic levels, is going to keep us on the right side. So what I would say is if and when we come back and retest those levels, I think it makes a lot of sense to get some exposure again.
Rookie question, which one of those moving averages you do think is the most important, or how would you list them as far as order? It doesn't matter. They're all kind of significant.
It's going to depend on the time frame that you're taking the trade, right? So, I think usually the shortest EMA that I'll use is about 13 days. And you might even be looking like, Caleb, why are you using the 21, the 34, and the 55? I like to use Fibonacci numbers. So those are all, within the sequence of the Fibonacci number range, right? So sometimes I'll use the 13 and the 21 and the 34. Sometimes I'll really just use the 21, the 55, and the 200. Obviously 200 is not a Fibonacci number, but it's probably one of the most important moving averages that I use. But it really just depends on your range, right? But I think that's the beautiful thing here, right? Is we're looking at those three levels, 21, 34, and 55, and saying, look, we can take marginal exposure every time we retest those levels to exercise a thesis or an outlook based on a short, medium, or longer term time frame, right? And in this case, we're looking at really short, and not as short time frames because we're using the 21, the 34, and the 55. These are obviously still very short term levels, but it's all going to come down to your time frame.
Let's talk Solana and what you're seeing on that front.
Dude, I actually did not bring a Solana chart with me, but here's what I will say. Let's go ahead and look at Bonk because I think Bonk is basically sol beta, if you will, right? And it's obviously kind of led on this massive breakout move here. We're using a very similar kind of strategy as that XRP chart with the anchored volume weighted average price from those Q4 highs of last year. We've achieved that breakout very similar to what XRP has been doing. We should probably expect good things to happen to Bonk so long as it stays above this range. I mean, we're already about 25% above the anchored volume weighted average price since we broke above it. This would not be happening if Solana was struggling, right? Because obviously this is probably one of the leading altcoins on the Solana ecosystem. I think it's the second largest after Trump, and then Fartcoin is up there. Yeah. So, I mean, these are the three Solana ecosystem tokens, and you can basically exercise your thesis on Solana right here, in my opinion.
Oh, for sure. I'm not a big fan of meme coins, but it is what it is. It's in the market, and unfortunately, we just gotta, I don't know, deal with it.
Look, I'm also not a fan of them. It's basically a massive game of hot potato. And so for me, as someone who just trades based on technicals, I really have to put my pride, my ego aside and just look at this and say, hey, is there money to make here? And is there a way to do it while controlling and managing risk? Yeah. And I think for all of the talk around utility and the tech, objectively, we have really not seen those tokens perform very well this cycle. What's happening to Avalanche? What's happening to Cardano? What's happening to Litecoin? The list goes on and on and on and on. But when we look at a lot of these central exchange listed meme coins, they're outperforming all of the tech, utility, and DeFi tokens, 95, 98% of them. And that's signal there, right? So if we want to be in the fastest horse in the race from a trading perspective, and we can find attractive risk-adjusted opportunities for us, then you have to take those swings. And so for me personally, I've actually been trading a lot of meme coins. I think probably this year alone, I've almost exclusively focused on trading memes when I am trading. And so obviously during Q1, I gave back a lot of significant profits because I made a bunch in Q4. And I've been riding the wave back up again here over the last month or so, and it's been a great time.
Yeah, absolutely. And I think there's a well, we have to give the nuance there. You can trade it. I think if you know what you're doing, like you, right? You obviously know what you're doing, but there's some people who come in and they buy this random meme coin that was started last week, right? On pump.fun. And that's the part I don't like. But there's established meme coins like Doge, like Pepe, like Bonk, and so forth, have a community, have been around for a while, weren't started last week or last month. And, those are the riskier ones that go out further on the risk curve.
Exactly. I mean, you hit the nail on the head here. It's all about risk-adjusted opportunities. And so when we're looking at these things that are, very likely rug pull opportunities that are being listed yesterday or 2 days ago, or whatever the case is, yes, you can make a lot of money on them, but I would definitely urge a lot of investors to stay away from those 100%. And that's why even just for me, right, I'm trading only the ones that are listed on Coinbase. And, they're going to be really high beta to the rest of the market. So when the market is doing well, they'll do really well. When the market is doing poorly, they'll do really poorly. And I'm totally okay with taking that risk because I'm going to control and manage that risk and get stopped out at a certain point. So, we're all going to have a different level, and that's what it comes down to. But look, I mean, this market is just crushing it right now. Tony, I actually brought another exclusive study that I haven't shared anywhere else. I have to bring this one to you guys. Are you ready for this?
Yeah, let's see it, man.
Okay, so what we're looking at here is others. This is total crypto market cap excluding the top 10 coins, okay? What I've done here is I've added on the 150-day Williams percent R oscillator. 150 days, I'll typically use 120 because that gets us to a third of the year. So you might be looking at 150 and say it's a little bit arbitrary, but I still think it gives us a really effective signal here if we're just going to focus from a statistical kind of blindness, right? If we're only focusing on statistics, what is this signal telling us? How effective has it been in the past? So what I'm highlighting here is a signal that literally just flashed this weekend on Sunday, and we're obviously continuing to get really strong follow through since then. But what we're looking at is each time the 150-day Williams percent R oscillator has gone from oversold, which is below the lower bound here, to overbought, which is above the upper bound here. So we're getting this full oscillation from oversold to overbought. Essentially what we're looking at here are really strong statistical momentum thrusts. When we're seeing a momentum thrust, what is that? It's telling us that there is an overwhelming amount of demand coming into the market. Let's think about what that means, guys. Is it bearish if there's an overwhelming amount of demand? Probably not. That means a lot of investors are putting their money where their mouth is and speculating to the upside. For right or for wrong, but they are doing it. Investors are putting their money where their mouth is. And so what has actually taken place in others after this signal is flashed each time? If we look at the signal that occurred in the second half of 2023, it was a little bit slow for about a few months, and then we really had this massive uptrend that took place. If we look at the second signal that occurred in November of 2024, just after the election, we saw really fast and significant upside in a very short-term amount of time. So I don't know if this current signal is going to be much more like Q4 of last year or the second half of 2023. All I do know is that what this signal is telling us objectively from a statistical perspective is that our bias should continue to be to the upside. So I want to really kind of package everything that we've talked about on this podcast together, right? We're seeing Bitcoin already achieving some price targets, breaking out to new highs. We're seeing total minus stablecoins on the verge of making new cycle highs. We're seeing really strong market dynamics occurring for XRP and Ethereum. We're seeing BTC dominance plus ETH dominance plus XRP dominance show a lot of strength. We're seeing others try to make that momentum thrust. We're seeing a lot of really great things coming into the market. We're seeing stablecoin dominance declining. As we're looking at the preponderance of the evidence, it is telling us unequivocally, there's no question about this, guys, that our bias should be to the upside. And now the rest of the work is about managing downside. What is our risk that we're willing to take, and where are we going to get stomped out? That's what the game becomes about now. But we know without a question of a doubt, beyond a shadow of a doubt, that our bias needs to be to the upside. We are in an uptrend. If you're not long during an uptrend, you are doing investing completely wrong.
Yeah.
If you are not long during an uptrend, that is what we live for as traders and investors. We don't have a lot of access to these exotic instruments and securities and all this other stuff. We want to be on the left curve of this cycle and say, look, we are in an uptrend. We have to participate. And that means we need to be long and then focus on managing risk.
Absolutely. Well put. And I love that chart, by the way, the others excluding the top 10. That I know a lot of people are going to be interested in that because they hold altcoins that are, 11 to 100 in that zone, or 11 to 50.
Exactly.
So that's definitely great to see. We there's a lot of bullish signals here and a setup for the rally to continue.
Yeah. And look, the economy continues to be resilient and dynamic. It's certainly not perfect. We had industrial production numbers that came in way stronger than expectations today. PPI came in significantly lower than expectations. CPI was a little bit of a mixed bag, but I would generally say that disinflation is still intact and the Fed isn't looking to cut rates immediately. But rate cuts are probably coming in the second half of this year, at least 3 months down the line. And so from that standpoint, if we still see really strong corporate earnings in the United States, which is going to give us a bid in risk assets in the stock market, I mean, it's still very clear, right? A lot of crypto is just a high beta stock in a lot of ways. For right or for wrong, we could disagree with it. But if you look at the correlation between Bitcoin and semiconductor stocks, I think it's 86% over a trailing 3-month period. So clearly, if good things are happening fundamentally for corporate earnings in semiconductor stocks, and semiconductor stocks keep going up, then probably Bitcoin is going to keep doing really well also. So we have all of these things continuing to fall into place. Rate cuts are eventually going to be coming back into the picture here. And look, a lot of people were saying that, in 2024, they're saying, oh, these rate cuts are going to be bearish. Look at how the S&P 500 and the NASDAQ 100 have performed since those rate cuts happened in September. Look at how Bitcoin has performed since those rate cuts happened starting last September. Obviously, they have not been bearish. But, when other people are making stupid decisions, it allows us to make money a lot easier. So let's keep rooting for those people to say that rate cuts are bearish.
Caleb, always great alpha, great insights, my friend. And everyone, check out Caleb's X profile, follow him, sign up for his new newsletter. All great information, man. Thank you so much.
Thank you, Tony. We'll do it again soon.